Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here with your Friday morning pre-market webcast. Okay, daily chart, and then I want to talk about the hourly. Um, the bulls are putting the pressure on, whether it's fresh buying or whether they're squeezing them. Um, it is advantage bulls, and I want everybody to understand that very clearly right now. The bears are not finding any traction. Um, every dip, you've got people coming in to buy it because I think you are seeing some anxiety about potentially missing a run up higher into the inauguration. I personally believe that what we're going to see is we're going to see a pullback, not very deep, but you need to flush a little bit of this out. You need to establish a higher low. You need to demonstrate that this move and rejection has some validity to it. And it doesn't mean it has to be today, but I think it's going to be, for the folks that are talking about 2200 and above, I really think you've got to come back, establish a higher low, wash, kind of recycle that whole bit of in and out, and then you'll have the fuel to really march on into next year, into the inauguration. Um, how deep is that? It could be as shallow as another move to 2150, which is where we were just about 4 or 5 sessions ago. It could be mid band on the daily. By the time we do this, mid band could be 2150. So I want everybody to, I mean, take advantage of the long side, but I want everybody to at least recognize that we're headed fairly straight up right now, and you know we they're going to have to work some of this off because it's getting to the point now where it's hard for the bulls to sustain it, and we saw a little bit of that yesterday. Yesterday we got into the regular open, and the bulls just grabbed it, and they took it up to new contract highs, by noon. And then we saw a little bit of give back um, in the after hours, but nothing all that significant, and we end up closing, pretty much near the highs. In the after hours here, we tested the purple dotted line. There's daily pivot, which we tested. Then you had a push down to as low as, right around 77. You got a trend line here from the Monday low here, Thursday low here. Um, that was tested, overshot it a little bit, but held it, and now we're back up above. When I printed this for my subscribers, we had potential daily pivot resistance. We're up over the top of that now. So what the bulls are going to have to do in these situations is they're going to have to march up, certainly take out these highs, and ideally make a new contract high above 85.5. If they're unable to do that, then we're going to see a little bit more of what we saw in the afternoon, which is just kind of a struggle. It was a drip higher. You had the initial ramp, and then we just kind of bled up, just really holding everybody hostage up there. Um, the bulls are going to have to execute every day. When you do 6, 7, 8 session ramp jobs, when those get longer in the tooth, the pressure mounts to perform every single day. And that's hard for either side to do. It's hard for the bears to do when we're doing a lower band ride. It's hard for the bulls to do when we're doing stuff like this. So, a retrace doesn't necessarily negate the bull's advantage. What it does is it allows, fresh stuff to come in. The weak hands get sorted out. You guys know how it goes. Um, but the ability of this market to even get back to 2150 at this point doesn't look real good, absent some kind of news. I said the other day, it was either yesterday or the day before on here, the bears will need news, okay? If they don't have any news, then we're going to bleed higher. In a vacuum, we're going up. If this week has demonstrated anything, it's that in a vacuum, the market wants to trade higher. So absent news, you're not going to see a sustainable break, in my opinion. you may see some pushes down. You get back into that 2013, 2014 situation where where the bulls have 10 days and the bears have 10 minutes. Recognize that the next time the bears get their 10 minutes, that it may only be 10 minutes. Because when you start thinking, okay, it's going to be 10 days, that's when everybody gets caught. They're caught leaning over their skis, and it snaps back, and then you're in a whole other squeeze situation. Instead, watch what's happening with a pullback. Don't be afraid to try a long into the first set of higher lows off the bottom. It may work and it may not. The thing that causes sustainable pullbacks is when the dip buyers get knocked out, not once but twice, 3 times. If you see that happening, then you want to be short. But if you don't see that happening, then you want to be one of the dip buyers that comes in and buys that kind of a move. So I'm not saying any of this is going to happen today. But what I am saying as we head into next week, I want everybody to be very aware of this dynamic. We're in a big push up. It's getting a little old. We're going to pull back. We may not pull back very far or very long. And when we do, you got to be ready. Because the next move up, if that's the way it plays out, could be just as, put just as much pressure on price as this one. And I would rather have you in that than fighting it. All right. Everybody have a fantastic day. Follow us over at Twitter at Princeton Trader. Come check out the website, PrincetonTrader.com. Come check out the chat room. Have a fantastic trading day. Have a fantastic weekend. I'll be back Monday morning with another webcast. Trade them well, everybody.